Hi there, Richard here from Holaprime. And unfortunately, we have recently noticed that you've reached your maximum overall loss in your account, meaning that it is unfortunately a hard breach and that you'll have to retake a challenge again. Now, one of the top reasons for this happening is that traders trade with a lot size that's too large for any particular trade that they take. So, although they might be able to make potentially a lot more money if their lot size is increased, it also opens you up to way more risk if the trade goes against you. Sometimes traders, especially beginners traders, don't even use stop losses, meaning that if the trade goes against you or they don't monitor the trade, that the account can very easily get to that drawdown where you hit your maximum overall loss. Right, so the purpose of this video is to quickly show you on the DXTrade platform how you can use the built-in risk calculation tool to help you prevent that from happening again in the future. But before I do that, I'm just going to, for example, use a one-step prime trading challenge. Now, you're probably familiar with all of these rules or these targets that you need to reach for you to pass this challenge or the challenges in the first place. So, just for explanation purposes, let's assume you're taking a one-step prime account, a challenge, and you want to trade with $25,000 account size. Then hereby it says your maximum overall loss is $1,500. Right. So very easily traders make the mistake where they take these rules very, very lightly, or they just quickly glance over it and then forget about it in the future when they actually start trading. So, for example, let's say 6% of a $25,000 account would be $1,500. If you're trading without a stop loss and the market goes against you, that 6% can be reached very easily, meaning that you would then forfeit your account and that'll be a hard breach, right? Or in one or two or three trades, you can very easily also reach a maximum overall loss. Or over a few consecutive days, reach that $1,500 figure with a $25,000 example. It can get reached very, very quickly. Right, so next I'm going to jump to the DXTrade platform and I'll show you that risk calculation feature that's built into the platform so you can appropriately manage your lot sizes so you don't risk too much on any given trade. All right, so on the screen here, I've got the DX trading platform open and I've got a chart loaded on the Euro US dollar. It's on a 1 minute time frame, could be any market or any time frame. You're probably already familiar with the DX trading platform. But what I want to show you is how to actually set the right lot amount according to your account size or the challenge that you're partaking in. Now, there's a few ways you can obviously open the order window. You can just go right click on the chart and you've got a few options here: buy market, sell market, or you can use limit orders, right? Or the other feature is just let's say we think the euro US dollar is going to go higher from here. You can just click on the buy button and that will open up a order window. All right. So once that's open, by default, you'll probably have, I don't know, one lots or zero point 0.1 lots there. I've already used this platform a few times. So mine's set on 2.5 lots. Now, the lots is very important in this explanation because that controls the amount of risk that you're taking in the trade or the amount of euros in this case that you're actually controlling when you open a position. All right. So let's say, for example, I want to buy the euro US dollar. I just want to use a market order here as an example. Obviously, the first thing you always need to do is make sure you're trading with a stop loss. Now, to do that, you can just click on the protection order window here, click on stop loss. So the first decision you wanted to make is, do I want to buy or sell? Right? Which order I'm going to use? I'm just going to use a market order in this example. Thirdly, you need to always use a stop loss. And this is where the important part of this whole video comes in, is that you need to decide where your stop loss is going to be placed. Now, let's say, for example, we think the euro US dollar is going to go up from here. You're interested in buying it, and you want to place your stop loss below price, let's say at 1.1250. You can then just go ahead and actually change that price number over there. And as you do that, you'll see that with 2.5 lots, you'll be risking 280 plus minus, because it's a market order. It will change as price fluctuates. All right. So you, depending on where you're actually entering and where you place your stop loss, then by manipulating the lot size, you can control how much you would lose if price goes against you, the trade doesn't work out, and you get stopped out. All right. So that is just a very, very simplistic explanation of how to, determine how much you want to lose. Now, if you, not how much you want to lose, but how much you can potentially lose, sorry. So if you were to increase that lot size, right, then your projected loss would get higher. If you decrease it, that projected loss would get less. And that would be on that fixed area that you decided to put your stop loss. Now, you can obviously decide to put your stop loss much closer to price action or much further away from price action. But by controlling your lot sizes, you'll then lock in the amount of the maximum loss that you can take on that account should the trade not work out. Right, so very easy to do. Um, for example, if you had a $25,000 account and you wanted to place a stop loss at 1.2500, like we just did over here, then let's say 1% of that is all you want to risk on that account, on 25,000K account, would be $250. Now, currently, with 2.52 lots, it would be $325. So we'll have to decrease that. So again, by just manipulating the lot size, you can then go and change that maximum amount that you're willing to lose on any particular trade. Right, so that would be about $250. So if you had $25,000 account, then that would be 1% of your account. Some traders actually decide to use a lot, risk way less than that, so they can build a buffer as they progress through their trading challenge. Let's say like 0.5%, for example. Now that would be $125. If you wanted to keep your stop loss at 1.12500, then you'll have to further decrease your lot size, right? So in this case, it will probably be one lot. So that's almost plus minus 0.5% of your account size. Now, this is a larger equity account or balance that I have in this particular account. So if you had a $25,000 account, it will actually say 0.5 over here. Because this is a much larger account, if I had to risk only $125, setting my stop loss at 1.12500, that would only be 0.12% of my balance. Right, so once you figure out where you want to enter, whether you want to buy or sell, and where you want to place your stop, you've changed your loss, so you only risk a small percentage of your account. You can then go ahead and click send order, and you'll get into the market if you use the market order. Alternatively, you have to wait for price to gravitate to a level if you wanted to use a limit order instead. Right, so that's how you control your lot sizes and therefore your position sizing. Risk management, extremely crucial in trading. Right, so you can very easily see that if you used a lot size that's too large for your account, and something happens and the market moves against you, it doesn't go into your theta direction, that you can very, very easily reach 6% drawdown in your account, and therefore, or over consecutive days, reach that 6%, and therefore forfeit your trading challenge, your maximum overall loss in your account, and you'll have to start over again. All right, thanks for watching. I really hope that this helps for the next time you want to take on one of these challenges. Please remember, risk management is the most important thing in trading. It's about how long you're in the game and not how quickly you can make profits. Right? Always focus on your risk first. Always use a stop loss, and make sure that you do not trade with too many losses so you can reach those limits in your account too quickly.